Energy prices have been on an absolute tear over the past couple years and have caused some pretty crazy price movements in the energy sector. These dividend-paying companies have outperformed the S&P 500 index by double digits and stand to see even more growth if energy prices continue to rise. What do you think this means for the dividend distributions for these businesses? In this video, we're taking a deep dive into 4 stocks that have outperformed the S&P by the widest margin and analyze the future and safety of their dividends. Civitas Resources Incorporated is a Denver-based oil and gas company focused on developing and producing crude oil, natural gas, and natural gas liquids in Colorado's Denver-Julesburg Basin. The company operates on about 500,000 net acres with a production base of roughly 160,000 barrels of oil per day. CIVI was formed through a 3-way merger of Bonanza Creek Energy, Extraction Oil and Gas, and High Point Resources, which combined 3 of the top 10 oil producers in the state into one. The company is listed on the New York Stock Exchange under the ticker symbol CIVI and has a market capitalization of approximately $2.5 billion. To date, Civitas Resources has outperformed the S&P 500 index by 17.8%. Civi's commitment to sustainable operations is a key aspect of its business strategy. The company believes that caring for the environment, employees, and communities is critical to its role as an energy producer. Civi is leading Colorado's oil and gas industry in its commitment to sustainable operations, and the company's respect for the remarkable landscape and vibrant communities where it operates is an essential part of its corporate culture. The company's financial performance has been strong, with revenues of $3.2 billion and net income of $478 million in 2022. Financial growth has been massive since 2017, with all income metrics experiencing double-digit growth, most notably net income growth at 31%. Civi pays a semi-annual dividend of 50 cents per share, but has also made 5 special dividend payments since March of 2022, which has likely contributed to the performance over the S&P 500 index. Over the past 12 months, they paid $8.60 in total dividends, which gives a 12% total yield. Taking these special dividends into account, the dividend growth rate has been almost 9% for the past 3 years. Payout ratios have been extremely safe, just topping 50% in 2022 and currently sitting around 12%. Civi's management team has extensive experience in the oil and gas industry and has a proven track record of success. The CEO of Civi is Eric Jacobson, who has over 30 years of experience in the industry and has held senior positions at several prominent oil and gas companies. Overall, Civi is a well-established oil and gas company with a strong commitment to sustainable operations and a proven track record of financial success. The company's experienced management team and focus on sustainable operations provide additional confidence in its ability to continue to generate strong financial results while also contributing to the communities and the environment in which it operates. The special dividend payments have bumped Civi's yield up into high-yield territory without spiking payout ratios. Net income has absolutely exploded over the past couple years, so this comes as no surprise. Excluding the special dividend payments, the yield sits at just under 3%, which isn't horrible but is a little less than what I'd like to see. My hope is that the strong financial growth and rising energy costs boost their regular dividend even more, but I'm not counting on the special dividend payments continuing endlessly. Dorian LPG Limited Partnership is a leading owner and operator of modern very large gas carriers, or VLGCs, which are used to transport liquefied petroleum gas around the world. The company has a fleet of 22 VLGCs and operates in various regions, including the Americas, Europe, and Asia. LPG is listed on the New York Stock Exchange under the ticker symbol LPG and has a market capitalization of approximately $600 million. The company's focus on the transportation of LPG has allowed it to benefit from the growing demand for this fuel source, particularly in developing countries. To date, Dorian has outperformed the S&P 500 index by 29.6% in total returns. The company's financial performance has been strong, with revenues of $500 million and net income of $70 million in 2022. Like Civi, LPG has experienced explosive income growth, particularly in net income increasing at 33% and operating income growing at 20% per year. LPG has been paying a quarterly dividend since 2021 and currently has a yield of 16.6%. They did suspend their dividend payment in Q4 of 2021 and cut their dividend in Q3 of 2022, however. Payout ratios have been pretty high, hitting 326% over the past 12 months and 180% for the year before that. LPG's commitment to safety and environmental stewardship is a key aspect of its business strategy. The company has implemented a number of initiatives to reduce its environmental impact, including the installation of ballast water treatment systems on its vessels and the use of low-sulfur fuel. LPG is also a member of the Getting to Zero Coalition, which aims to reduce greenhouse gas emissions from shipping to zero by 2050. The company's management team has extensive experience in the shipping industry and has a proven track record of success. The chairman, president, and CEO of LPG is John Hadjipateras, who has over 30 years of experience in the industry and has held senior positions at several prominent shipping companies. Overall, LPG is a well-established shipping company with a strong focus on safety, environmental stewardship, and financial success. The company's experienced management team and focus on sustainability provide additional confidence in its ability to continue to generate strong financial results while also contributing to the safety of its crew, the environment, and the communities in which it operates. Although LPG's financial growth is very strong and the long-term outlook of the company is very good given the current energy market environment, I'm concerned about the lack of dividend history and high payout ratios. Perhaps Dorian is forecasting continued growth and is trying to entice investors by increasing their dividend. Broadmark Realty Capital Incorporated is a specialty real estate finance company that invests in opportunities throughout the small to middle market, generally in the $5 to $75 million range per transaction, but the company can be flexible on its investment amounts above or below that range. The company provides smart, reliable, and rapid financing solutions for real estate investors and developers. Broadmark is a publicly traded company listed on the New York Stock Exchange under the ticker symbol BRMK. As of May 23, 2023, the company has a market capitalization of $1.2 billion and a share price of $4.96. To date, Broadmark has outperformed the S&P by 35.3%. The company's investment portfolio consists of various types of real estate, including residential, commercial, and hospitality properties. BRMK's investment strategy is focused on providing short-term loans to real estate investors and developers, typically with a term of 12 to 24 months. The company's loans are secured by the underlying real estate collateral, which provides an additional layer of protection for investors. BRMK's revenue comes from the interest and fees it earns on its loans, as well as from the sale of its loans and other real estate assets. The company's financial performance has been strong, with revenue of $140 million and net income of $35 million in 2022. Financial growth over the past 3 years has left much to be desired, with most income metrics declining at double-digit rates. This is mostly due to a steep drop-off over the past 12 months in net income, operating income, and free cash flow. The current dividend yield sits at 12%, but this is accompanied by high payout ratios in the mid-100s and payments with a negative net income. The company's management team has extensive experience in real estate finance and has a proven track record of success. The CEO of BRMK is Jeffrey Pyatt, who has over 30 years of experience in real estate finance and has held senior positions at several prominent real estate companies. Broadmark's share price increase since the beginning of this year and the dividend distribution of 10 cents per share in Q1 have pushed the stock far ahead of the S&P 500 index, but I'm apprehensive about the long-term outlook of this company. The weak financial growth and high payout ratios have me worried about the safety of the dividend, which would also adversely affect the share price were it cut. Enel Chile S.A. is a Chilean electricity utility company engaged in the generation, transmission, and distribution of electricity. The company operates through its combined entities and affiliates and has a presence in various regions of Chile. Enel is listed on the New York Stock Exchange under the ticker symbol ENIC and has a market capitalization of approximately $4.5 billion as of May 23, 2023. To date, ENIC has outperformed the S&P 500 index by 35.5%. The company's financial performance has been strong, with revenues of $6.5 billion and net income of $800 million in 2022. Income growth has been a little all over the place. Free cash flow has declined 15% over the past 7 years, while net income has grown nearly 16% over the same time frame. ENIC typically pays 2 dividends per year and last year paid a total of 34 cents per share, giving the stock a forward yield of almost 12%. Payout ratios have been variable and normally sit below 60%, though they did spike up above 100% between 2020 and 2022 and paid a dividend with negative net income in 2021. These high payout ratios eventually led to a cut in 2023 of over 80%, so I wouldn't expect these high yields to continue. The company's commitment to sustainability is a key aspect of its business strategy. ENIC has set ambitious targets for reducing its greenhouse gas emissions, increasing its renewable energy capacity, and promoting energy efficiency. The company's renewable energy portfolio includes hydroelectric, wind, and solar power plants, which provide a significant portion of the company's electricity generation. ENIC's management team has extensive experience in the energy industry and has a proven track record of success. The CEO of ENIC is Paolo Pilati, who has over 20 years of experience in the energy sector and has held senior positions at several prominent energy companies. Overall, ENIC is a well-established electricity utility company with a strong focus on sustainability and financial success. The company's experienced management team and commitment to sustainability provide additional confidence in its ability to continue to generate strong financial returns while also contributing to the environment and the communities in which it operates. Although ENIC has recently cut its dividend, the share price has been steadily climbing since the beginning of the year, which has led to its outperformance of the S&P 500 index. Enel Chile went through a period of lower than expected income and it shows in the dividend history. If this company is able to boost its income over the next couple years, the dividend will likely bounce back to pre-pandemic levels, in which case the current share price is a bargain. 3 of the 4 top stocks this year have all been in the energy sector. This makes sense given the state of the energy market. All fuel sources have seen massive price growth and some energy companies are experiencing windfall profits. Let me know in the comments what you think about rising energy costs and how it's affected the stock market over the past year. Although these companies have outperformed the S&P for the past few months, I don't think they're all good long-term holds. For the best utility sector stocks on the market, check out my top 5 utility companies video here. For more videos on dividend stock analysis, make sure you subscribe and turn on notifications. Thanks so much for watching. Till next time, stay safe and take it easy.